someone else posted a delinquency, a mortgage delinquency, and they compared 2020, 2021, and 2022, compared it with 2029. Now, the premise of the text above their post was how like there's more delinquencies coming. But I questioned it. I'm like, 2020 through 2022, the delinquency rate has been dropping every single year. And then the 2022 rate compared to 2009 in almost every category is less than half of what it was in 2009. I was like, so where are you getting, how are you making that conclusion? And beyond that, it's institutional investors right now, they've been hoarding their money in real estate. That's been a part of the problem of rapid appreciation. You get institutional investors buying up entire subdivisions, the build to rent. And I mean, it's been happening forever in multifamily, but now in single family at scale. So I think any slack in inventory, they'll gobble it up.
Yeah, and that's not a good thing. Right. So I mean, I guess we all have our opinions.
No, it isn't, but it also is. Meaning, I don't necessarily like. I think people should have the ability to buy a home, but ultimately, these are the cards we're dealt. And if someone's not going to buy it at the end of it, homeowner, like as institutional investors, they're chasing yield. They're trying to protect their money from inflation and make a profit. And right now, real estate has one of the best options available to them. They're not investing in tech. They're not investing in like VC and all that. So those kind of markets have softened a little bit. Stock market's been pretty volatile. So real estate's just a good hedge on that.
Yeah, definitely. And we'll see moving forward, right? But I mean, I think what you mentioned is very important because you're looking at data. You're not necessarily looking at emotion, where a lot of people are making these assumptions based on emotion, what they want to happen, what they don't want to happen, and they're not looking at the data. So like what you're looking at, like the inventory rates, and then also new consumers coming to the market. That's kind of what I was mentioning in the very beginning of the podcast when I said you have a really good insight on what's going on in the economy from a macro scale. I think that's what I was that's what I was alluding to, is a lot of people are kind of just looking at it from their own perspective, maybe as an agent or an investor, and, how might a crash affect them personally? And, for investors, it could be a positive thing with prices going down. For realtors, it could be a horrible thing with, no longer having the ability to list as many houses. And they're just kind of looking for evidence that will support whatever they want to happen.
Of course. Now, realtors, to tag on that, like realtors, yeah, it definitely affects them from a listing standpoint or like a sales standpoint. But where they can make up, it's going to be more work. Renters, like they're just going to have to focus a little bit more on renters, because renters, a decent percentage of them will become buyers. So they can help out with that. Maybe they also got to diversify too on working like with manufactured homes, home sales or tiny homes or stuff like that. So it's a changing market. And you just ultimately, if you don't change with it, you get left behind. That's the who moved my cheese story. Like, we just have to adapt, because if you get too comfortable, which I was too comfortable with flips. That's why I didn't go over into multifamily mobile home parks, self-storage units when my buddies did. I watched, and I think I probably should have made the move sooner. But at the end of the day, I was comfortable. That's fine. I mean, I just learn and adapt as it goes.
Right. Learn and adapt. It's better, in my opinion, to have like skill sets that are overlapping, even overlapping within like industry, than it's to just be like very focused on like trying to have that security. So if you have like skill sets that transcends industries and timelines, I think that's probably the most important asset anybody can own, on top of, own real estate. Right.